Hi and welcome back to my channel. In today's video I'm going to talk about things I wish I knew when I started investing. There is so much information around investing and some things seem rather daunting and complex when you're starting out. So I'm going to talk about a few things I wish I knew when I began investing and hopefully prevent people from losing some money. If it's your first time watching my channel, then my name's Ollie and I've been an IT consultant developing software solutions for the finance industry since 2008, and I've been actively investing in the stock market since 2016. If you enjoyed this video, then I'd really appreciate an early thumbs up, as it really helps with the YouTube algorithm so that my content can reach more people. Also, please subscribe and press the bell icon to be notified of the latest videos, as I upload new content every week on personal finance, investing, and how to reach financial freedom. Please note, the information in this video is not intended to be investment advice, and if you want investment advice, you should seek a licensed professional. Also, past performance is not indicative of any future results. If you're not already signed up to Etoro and decide to sign up while watching this video, then I have an affiliate link below this video, which if you sign up using it, then I will get a kickback and it doesn't cost you anything extra, but it really helps support this channel. So the first thing I wish I knew when starting investing was you don't have to pick stocks yourself. And when starting out, if you try to pick stocks yourself, it is likely it's not going to go as well as you expect, because as a beginner, you won't have the experience and won't know how to analyze investments properly. Nothing against you, but it's just you don't have the knowledge yet. As a beginner, you are likely to do poor analysis or no analysis whatsoever on the stocks you pick. And this is actually what I did when I started out. So there are some safer ways than picking individual stocks for beginners. Firstly, you could do what I did when starting out and use Etoro's copy trade functionality, which if you don't know what that is, then I did an in-depth video on it, which I'll put a link to up here and in the description below. But as a brief overview, when you start copying a trader, you're basically duplicating their positions in real time and as a direct proportion. So if the trader you're copying, say they have 50K in their portfolio and they invest 10% of their portfolio into Tesla, then say you copy that trader with $1,000, you will also invest 10% of your invested amount into Tesla, so you will open a position for $100 in Tesla. So basically, you would need to find someone on Etoro who is a decent trader and you're technically letting them manage your funds. If you want to know how I pick a trader to copy, then go check out my video up here and I'll put the link in the description also. Or a second alternative to picking stocks yourself is to invest in an index tracking fund. An index generally tracks some of the biggest companies on a stock exchange, such as the FTSE 100, which is 100 of the biggest companies on the London Stock Exchange, or the S&P 500, which is 500 of the biggest companies on the US markets. So if you were to invest in an S&P 500 index fund, the fund basically buys into all 500 of the companies, then you buy shares of the index fund to get exposure to all of the companies, and this saves you from buying all 500 individually. This is great because it also diversifies your wealth. To be fair, I actually recorded a video recently showing how most people can become a millionaire via compound growth and investing in an S&P 500 index fund. If you want to check that out, then the link's up here and in the description, but just a word of warning, it takes a lot of time. Also, one thing to note, that often when trying to beat an index fund, it's actually quite hard when picking individual stocks. So an index fund is a very decent and viable strategy for a lot of people. Even a lot of experts don't beat the market. And to be fair, the S&P 500 generally returns about 7 or 8% on average over a large number of years. So to be clear, that's not saying you will get 7 to 8% every year, but over a large number of years, it will average out to about 7 or 8%. So some years could even be negative. Also, by buying an index fund, this reduces brokerage costs, because if you go to a broker that charges per trade, you would be buying 500 stocks and that would get rather pricey. So investing in an index tracking fund, you will only have to pay per trade or each time you buy into that asset. Another alternative to picking individual stocks is you could invest in copy portfolios on Etoro. These are kind of like a themed mini portfolio that Etoro manages on your behalf. I left these last because when starting out, the entry point is probably higher than it is to invest in some index funds. For example, the entry point for copy portfolios varies, but at the time of recording, some of these start at $1,000. Now, while past performance is not indicative of future results, one of my best performing investments to date is the In the Game copy portfolio on Etoro, which is a group of stocks from the gaming industry. I've got a video comparing copy portfolios to copy trading, which you can check out up here and in the description below. So the second thing I wish I knew when starting investing is that the sooner you begin investing, the better. So I have a whole video on this subject about compound growth, which I mentioned about before, and this is how I plan to become a millionaire. But the more time you have your money in the market, the better chance you have of making more money. If you want to check out the video in depth on this, then go check it out up here and in the description. But if I flash up this link here, then you will see that if you put $1,000 in here every month with an average return of say 8%, then in 26 years, you will become a millionaire. So the sooner you can start this journey, the better. Now, I'll put the link to this in the description also, but I recommend you go check out the full video on it and then you'll see more about it. Also, the sooner you start investing, the more you will learn over time. So the third thing I wish I knew when starting investing is that keeping your money in a bank is very likely to devalue over time. If you're like me and have your rainy day fund in a savings account, I am currently getting 0.15% interest, which is you may possibly have a savings account which has a better interest rate than that, but anything below the current inflation rate, which in the UK is 2.1%, then your money is actually devaluing. Now just bear in mind that every country has different inflation and savings rates, so it's worth Googling this for your specific country. But this is correct at the time of recording for the UK. And if you don't keep your money in a bank for any reason, I'm not sure why you would do this because you will lose all your money if your house burns down, then you're not even going to be earning any interest whatsoever. So basically you need to be beating inflation each year. So the fourth thing I wish I knew when starting investing is don't be short-term focused. It's all about the long-term gains, and also don't panic. Now this can be hard, especially when you're starting out and you see your investment go down, which is actually what happened to me. The first 2 months of investing, I was down and I started thinking, is this worth it? But I stuck with it, and then after that, it started going up. You have to understand that negative years are a real possibility. And also, depending at what point you get into the market, it could be a bad month. Investors should be looking to invest their money for at least a few years at a minimum. Whereas new investors sometimes only look at short-term gains, and yes, some companies do well in the short term, but often when new investors see a stock losing money, they panic and cash out. When this happens, you've got to question, has the fundamentals of the company changed in any shape or form? Stock prices fluctuate, and some more than others. Cryptos fluctuate even more so. So with cryptos, you've got to be prepared for double-digit gains or losses. If there is an underlying reason that something has changed about the asset, then perhaps you should sell, but don't just sell because the price has gone down. Do some research. If nothing has changed in the company, then experienced investors will actually see the dip as a good thing and will often see this as a buying opportunity to get more of their favorite stocks at a cheaper price. Pullbacks in prices are common. As you can see on this 30-minute chart of Tesla, prices do go up and down, and they do pull back. So even as it's been going up here, it pulled back here, and then it's going up again. And even if you look in the shorter term, it pulls back every time it's going up. This is just the way of the stock market. Especially as your portfolio grows, the value of your portfolio overall can fluctuate hugely over the course of a week. I think the other month my portfolio dropped by 8K in a day, but I didn't sell anything. I knew those stocks were solid and there was nothing that had changed about those stocks, and it completely recovered over the following weeks. So this brings me on nicely to the fifth thing I wish I knew when starting investing, is that you really need to control your emotions. Like I said before about not panicking, this is obviously done by controlling your emotions. But another emotion you really need to control is FOMO, or fear of missing out. FOMO is your worst enemy. You will often see people making hundreds of % gains on certain stocks, and they will often post this on social media or news boards, etc., etc. But jumping in just because you fear you're going to miss out is the wrong thing to do here. You may get lucky, but very often you could be buying in near the top, then that stock comes crumbling down. Or without proper research, you could be buying the latest hype or fad stock. You really want to do research and not just get in on a company that you heard through the grapevine is going to do well. If you miss an opportunity, yeah, it's annoying, but I can guarantee there will be more around the corner. It's better to do research and not rush into something rather than making a mistake on an investment. It's fine to take as much time as you want, and is actually better doing so. I know everyone would love to be a millionaire overnight, but the safest way to become a millionaire is to invest over the long term. There's a statistic that 95% of people that day trade actually lose money. So investing and taking it slow and steady is generally the best way for most people. Controlling your emotions is something you need to learn. Also, another emotion to control is greed. You should really have an ideal exit plan when taking out a position. That's not to say you can change your exit plan at a later date once you have reassessed and you think the stock can go further, but remember to lock in some of those gains. Otherwise, what's the point in watching your stock go to 50, 60, 70, 100% gains, and then you get greedy and it comes back down to not far off where you started? You have to remember, stonks don't just always go up. So lock in those gains. Also, one last thing I must mention is to only invest what you can afford to lose. Your capital is at risk here. So that's pretty much it for this video on things I wish I knew when starting investing. If you've got any questions on this, then please let me know in the comments. Let us know what things you wish you knew when starting investing. I'd love to know, and I read all of your comments. If you found this video helpful in any way, then please give it a thumbs up, as it really helps the channel. Also, for those of you interested in signing up to Etoro and haven't already, like I mentioned earlier, there's an affiliate link down below where if you do sign up using it, then I will get a kickback, and it doesn't cost you anything extra, but it really helps support this channel. So why not give Etoro a go before depositing any real money, as they will give you a demo account with $100,000 of virtual money, where you can experience all of the features like index fund ETFs, copy trading, and copy portfolios without losing any real money. Also, if you want to learn how Etoro works or learn more about personal finance and investing, I have numerous videos on my channel, so I recommend you go check them out. So please subscribe and press the bell icon so you don't miss out on any future updates. Also, go check out my Instagram page for Get Geek Finance and give it a like if you haven't already, as I'm going to start posting more on there soon, so be the first to get in on that. It's been Ollie from Get Geek Finance. Thanks for watching, and I'll catch you in the next one.